Hey everybody, welcome to Trendy Trading. Let's go ahead and get started with the broad market analysis. This is going to be covering the short week. I do believe futures will still be open. We'll have to see here tonight, so that'll be interesting. But we are covering basically from Tuesday. Remember, Monday is a holiday. Up until the 9th, which is Friday. And as a reminder, if you haven't been able to catch me on audio, I am taking a vacation this week starting on Friday, and I'll be returning on Tuesday the 13th. Now, during that time, Friday will most likely just take off from the markets. I won't be doing anything. And then Monday, I will most likely give some sort of trade plans going into that Monday and that Tuesday. I'll have my laptop and so forth. Now, when I do return back to Florida, there is a slight possibility that I could take off again and then head to see my oldest and my grandson. And from there, I'll let you know though once I get back. So basically, it'd be a week of vacation. I've already have that vacation over at Simpler Trader Trading, and as you guys know, I am a guest there, and I have another 30 days that I am there. So it's almost been going on just over 2 months that I've been there. It's been a fantastic journey. I've met a lot of you from there, and I really appreciate your support. Now, saying that, let's go ahead and get into this week. And, Friday was really, I feel like Friday really changed a lot of vibes, even in the room, even out there on social media. And I just want to like hear back from you guys. And that's why I created the journal channel. You don't have to like post a picture of a trade that you took. Whether you lost or you didn't, what I really want to hear too are your stories. Like, what happened to you this week? Why did everybody go kind of quiet? Is it just because you're on vacation or the market looked crazy so you didn't want to trade? Or did you take your last trade that just like ruined your entire week? Like I would like to know. That's why we created the community so that we can reach out and kind of support one another when times get tough and when times are great. That is great too, but just keep in mind, like it doesn't have to be great all the time. It's trading. It's not easy. That's something that we say a lot in here. So just know that there are many traders that are probably most likely in your same shoes right now. Okay. So please reach out, use that channel as much as you like. Be more proactive if you have the time. I know a lot of you work, and we have a holiday week, so it's nice to get away. But in the future, please just try to take a little bit of time at night and put some kind of information in there about your day. I really appreciate it, and I can't wait to see that. Anyways. Once again, let's get started. So we are going to cover the SPYs, the Qs, talk a little bit about my overall sentiment. This is going to be really quick and easy. I'm not going to go over the Thinkorswim levels because you have those charts. I even gave you a link so you can put those levels on your charts this week. You know what those levels are. So we're just going to go over the bigger picture, and I think this is most important right now. Notice that SPY, this is your monthly chart. I'm using TradingView. So I went ahead and measured. These are the same measurements that we had from last week, and we had some major levels that were broken. So the 618 did break, and I'm saying that this week these are going to be your major levels of 394.30 and 385.48. Now, going back to my Fibonacci, what I've been preaching for since we started Trendy Trading was that the 76.4 is what I call an imposter level. Now, the probabilities, and we're looking at a monthly chart though, so you need to understand it's only the fourth. And because of that, this can change very quickly. But typically, when we close under the 618, we have an 85% probability that we can see the 88.7. Now, we haven't closed. Again, it's only the fourth. So going into this week, these are major levels. If for some reason we push up into that 394.30 area, this will probably be the better area to try and short long term. Okay. Now, if we for some reason gap down, a major gap down or something like that happens, be looking for the 385.48 to go bid for buyers to show up. Like I said in some of my notes, I would actually be pretty shocked if we break back down below the trendy edge down here. But at the same time, I wouldn't be shocked. And I made a little comment there. It just makes sense for 2022. I feel like 2022 has just not been a great year for people in the stock market overall. And it just kind of would shape up that way. Now, notice we have basically an H pattern that's happening here. And you can see that we found our bids here at the relief. We popped up into the cloud. We even looked really nice up here, but the overall shape is looking like an H pattern or an hope pattern. I hope it doesn't keep falling, right? So there's a couple major things on smaller time frames that we came into some 4-hour zones. We're still holding a weekly zone on the ES futures, and so there could be a pop. We'll see. We'll let price dictate that. But the bigger picture, it doesn't look great, guys. We're in the cloud. We're in a monthly cloud. It's really choppy. Friday was absolutely nasty. I was telling Ashley yesterday. This kind of shocked me. It just kind of came to my memory that in the morning it was absolutely fun. We were playing Salt and Pepper, Push It, and we were having a blast, and we made money out of the PMZ on the future trades and that type of stuff. And, I just kind of slowed down, and then all of a sudden, towards the end of the day, it was just shocking, to be honest with you, how much they pulled it back. So, whether it was a catalyst or the market's just like full on bear mode right now. Either way, if you were caught off guard, then, try not to get too upset about it. Just know for next time what your allocation is, what you're comfortable with losing, and so forth. You always want to be approaching the market like that, especially if you're playing options, folks. Okay, options can go to zero. All right. Let's go into the QQQ. Again, my overall sentiment for SPY is sideways to down until proven otherwise. If we start to break above 39.40, 394.30, then we can see a move back up towards the 401 area. It looks like we could be coming into some chop this week. All right. Let's look over here to the Qs. Same thing. We're stuck in this cloud. It's getting pretty tight. Basically, the top of your EMA cloud and the bottom are starting to come together tight. I feel like, again, this could be kind of sideways for the next several weeks while we sit in here, unless we have some sort of huge event that would cause a big pullback and we actually start to break down below that cloud. But for right now, it looks a lot like the SPY, where price is holding below the 618. Not a good look. You can see it's also rounding out, looking like a, not rounding out, but more of a H pattern right here. But we are coming into major levels, the 76 and the 88.7. Once again, we're below that 618. There is a probability of 85% that we could see the 88.7, but we'll take it one step at a time. All right. So first, 290.65 is going to have to break down. So your major levels for the Qs going into this week are 299.05. We're at 295.17 when we closed, and then 290.65. I do believe that the Qs or the NASDAQ has been leading the market. It just depends on how you look at it. They broke below the trendy edge. You can see that. Whereas the SPY, I said that I would be shocked if we closed down below it. But, are they the canary in the coal mine? Are they trying to show us and tell us, hey, look, as far as a trendy methodology goes, if you're sitting above a trendy edge, most likely, you're going to break through like the Qs. I don't know yet. All right. What's most important for me right now is this cloud. And as long as we're sitting in here on the monthly, it's going to be really choppy. It's not fun. It's kind of ugly. It seems like the biggest success in the room are, which is kind of crazy, and it does fluctuate. I'm telling you guys that right now. It's like, let me give you a couple examples. I'm hearing a lot of people with a lot of success just using the PMZ, right? I would never, to be honest with you, be like, hey, I'm just a PMZ trader. But in these conditions where it's intraday trading, it seems to be working very, very well. All right. Now, I want to say something. There's a caveat to that. It's like people who I meet who are like, when the market was doing really well, right before 2022, I can't tell you how many people I came across that were like, man, I just only love swing trading. That's where the money is. That's my favorite thing, and day trading is just not for me. Well, I guarantee you, if they are still around, they have probably turned themselves into primarily day traders now. So you need to be flexible. So again, the PMZ is really cool right now. It's working. It's always worked pretty well, but there will be a time where your edges will be your go-to, and the PMZ is just something fun that you can trade during the day to make that quick cash. Okay, please be flexible. If you have the PMZ, please go to the community channel or journal and pay attention to some of the notes. We have some new traders in there giving you guys some really nice wisdom on how they're trading that. And there's a lot to learn from that. My biggest thing is when you're looking at the PMZ, it gives you an opportunity to the upside. Sometimes it stops you out, sometimes it doesn't. But when it doesn't, holy cow, can you make a lot of money, right? It's like coming over here to the SPY on a 5 minute chart. That's where our PMZ is, right? And we open up here and we go back and we look at that PMZ. Let's go ahead and take a look at it, okay? So again, if you weren't with me in the morning, that's okay. We came down into a little bit of area. I believe, yeah, we made money live in here going down to the downside. When I say we, anybody in the room that could have been trading this and chatting and saying that. And then we waited for the break of the top of the PMZ and then went long. And this is where we turn on the music and I was super pumped. I thought we were going to 27, 40, 27 or something like that on ES. But you could see here, we just pop up and hit that 50 on the SPY. But I mean, this is what I mean. Opportunities are here, folks. Like you break below the PMZ, you take the trade, right? You break below the PMZ, you take the trade. All right. And then notice that once we broke above, you take it and you make money. And then you could be finished for the day, but this is interesting. Let's just say that you try to take it here and you're like, hey, I think that's going to work. Nope, it doesn't work. It stops you out. You go short and look at this beautiful move that, I'm not saying that you could stay in it. That's one thing that I preach on is like, I don't like hindsight trading. But the PMZ, you can go back and study it from the inception of the market. It's on every one of these. If you have them, you can go back and test it and see. And one thing that's really remarkable is understanding that you are basically lining yourself up with probabilities. All right. You cannot approach trading, in my opinion, and say, hey, the first one didn't work out. This just isn't for me. And then you miss four other opportunities where it could have really paid out big. Now, there are a couple times where the PMZ is going to be super choppy. Like when we opened up on Thursday, it was pretty nuts. It was really tight. It kept trying to show us that it was going to move over. We have a couple rules in the room where some of our traders, they wait for the candle to close. Matter of fact, I did that for quite some time because I would find myself, trying to run something to the upside and then boom, get stopped immediately. And you could see right here in the morning that could have been, where you constantly get stopped out, but it did run underneath, right? It did run underneath and you were able. And then at the end of the day, it breaks above. So how can you approach this? Even if you're away, even if you're working, you can set alerts. Just set an alert above the PMZ and one below the PMZ, and you know what the risk is. So that's going to show up on your chart. And you can do this not having to be in front of the screen. You get the alert and you're like, okay, it broke above. I know that, when I checked this morning, the PMZ was only 40 cents a risk. So I could take my trade from my phone and just put in a stop for 40 cents and so forth. So there's a lot of ways that you can still make money, even though the macro just absolutely is nuts, right? The market is moving. It's doing a lot of crazy things. My thought is that just take a chart or two and focus on the strategy, right? Even if it's just paper trading, try to sit there. Please understand this. I've been saying this for many, many years. My job is to be your coach and your lifeguard and try to teach you everything that I know. And I want you to be able to tailor that to your tolerance and be able to find what works for you. There is no absolute in trading, folks. The things that I have learned over a long period of time is one, keep social media at a distance, okay? I can't tell you how many young traders, and I hear this constantly, they feel like they're missing out. And I'm like, why do you feel like you're missing out? Like, you have the opportunity to go long here. You have the opportunity to go short here. Nobody's holding you back except for you. And if you didn't take that opportunity, stop finding excuses why you think it's other people's fault or it's something else that came across your mind. Just follow price, follow the levels, know your risk tolerance, execute that trade, stay off of social media. There are a lot of clowns out there, folks, a lot of clowns who, matter of fact, we've been reaching out for many years now and asked them to use our type of alerts, and they will not do it. They will absolutely not do it. It's amazing the excuses I get, folks, but I'm telling you right now, the reason they don't do it is because they cherry pick and they tell you what they want you to see. And that's the truth of the matter. You are not missing out. They lose just like you lose. They win just like you can win. And honestly, when they do win and they're telling you, hey, I held this until this percentage, most of the time those folks are lying. They cannot show you real alerts. So just please, my biggest thing here is like not to drink the Kool-Aid. Focus on you and what you can do to make yourself better. Okay. So, anyways, let's go ahead and move on. It's Sunday. The wife is gone, so I'm going to sit here and talk to you guys for a few. If you appreciate it, cool. If you don't, fast forward through it because every once in a while I get a little offline and get a little passionate about what I talk about. Okay. So the next thing that we want to talk about, again, we talked about SPY and the Q. Now let's go over here into, let's look at the dollar just really quick. Basically, you want the dollar to calm down. All right. It is super strong. It's very overextended. No matter how you look at this monthly, look how extended we are from the cloud. This is at 103, prices up here at 109. It has not come back and touched this cloud for quite some time. Matter of fact, it's right back here back in November. Okay, November of 2021. Are you kidding me? Like, we have not come back to touch this monthly cloud. We are extended, but that doesn't mean that the market can't stay extended. When I look down here at the TTM squeeze, what's interesting is we have 1, 2, 3, 4, 5, 6, 7, 8 momentum bars to the upside. Now, all the information I've heard, this thing can be anywhere from like 6 to 10. And what's really interesting is it's really working on the dollar on the monthly, right? And I feel like we're getting closer to some sort of pullback in the dollar. All right. Now, I know there's a lot of other things going on, and I don't quite understand everything. All right. But what I do know are technicals. And when I look at this, I say to myself, how long, you can see here, this looks like it touched 1, 2, 3, 4, 5, 6, 7. It took a while for it to come back here, almost an entire year. Once we broke from here, we're almost coming up on a year as well. I just feel like this is what I would consider a non-standard deviation, and that the dollar at some point is going to have to come in and cool down. And there, could be a rally in the market that actually lasts for more than 2 weeks. I'm not saying it's going to be this week. What I'm telling you is on a smaller time frame, I want you to watch and look for that topping wick. It could be anywhere from a 30-minute to a 4-hour. And once we see that, that typically is going to give us an indication that the dollar could slow down. So, for example, I remember this time right here. We caught this, and sure enough, the market started to round out and push up, and we got that rally that we wanted, right? So just be looking out for that. That's what it's going to look like. Typically, that topping wick. This is not really a strong topping wick. I like to see it be more than half the candle. That just tells me there's a lot of selling pressure. So, like right here, that's not really a big topping wick for me. So I'd like to see something a little bit stronger than that. Sorry, guys, my nose is itching. So yeah, topping wick here, not quite the one I want to see. Look at it just like a stock. If it's holding the cloud on a 4-hour, it stays strong until we break below. Again, one of the first indications is that topping wick, but then if we break below and actually close below the cloud, then things start to look different, and I think the market can pop. Now, in saying that, I brought up the fear of greed. You could see it here. It's pretty easy to understand. They also have like a video that you can watch, which is really interesting. I think it's still on here, but over here would be better. If I could see it here. I say this a lot. Some of the best times that I have in the market is when we're in extreme fear because I'm looking for demand zones and so forth. So anytime we are here, folks, we really want to be looking for those demand zones. When we're over here, we want to be looking for those supply zones. Okay. So we're at a fear of 41. Basically, most of your participants that are in the market are on the put side. And when participants are primarily on one side or another, the market is going to give you some sort of surprise. Okay. Um, to me, I'm actually shocked that we're even close to neutral. I thought it would be something more like towards, this way. But again, that just kind of happened on Friday, just like that. So it just hasn't caught up yet. Okay. All right. So that's fear and greed. And when we look at fear and greed, and let's see, if we look at the fear and greed and then we mix it, sorry, with the skew, all right, I'm going to come over here to the skew, just like that. And you want to be on a weekly. I feel like a broken record because we have been sitting down here for quite some time, and this is what 2022 is all about. Just like 2021 was basically at the major levels to the high side, and everybody was looking for a pullback. Here in 2022, I feel like everybody's looking for some sort of rally, but it's bad, right? Bad news, inflation, just all kinds of crap. But we're living down here at an extreme level. That's how I look at it. We're so down that you think possibly the best thing we could do for equities is to move up a little bit, but the rallies don't last very long. If you were to put a SPY chart behind this, you would see that we're just kind of rallying anywhere from 2 to 3 weeks, and that I think that might have been one of the biggest rallies this year. Um, and we could go back and kind of look at that, but the skew's telling me it's a risk-on environment. But look how long we stayed down here. I think we counted out like 2.5 months before we even started to move up in the market, so it was pretty ugly. All right. If we go back and you look, at past data, you can see that there's these extreme levels. You kind of do this, and we were down there for quite some time. But typically, if you were to put a SPY chart behind this, you would see that SPY is moving up when we come down to the risk on area. It's just a matter of time. We don't know how long that's going to last. All right. Now, this data is only back since 2012, but you can see we're at extreme levels. We're at fear, and this is usually a good time to be looking for the long. It feels different, but the technicals tell me, hey, John, like it's okay, right? Like right here. And I sent this out on Twitter. And if you guys would put like your comments behind that or just some of your feedback, what's interesting here is that it's not interesting from my perspective because I've been, looking at this stuff for a long time. But a lot of people feel like, oh man, Friday was crazy. And I agree. But at the same time, notice how the zone still held. That's interesting. It's not until we start to really break down below this pocket right here, this inside and up, that I'm like, okay, this stinks. Like we're headed right back down to the trendy edge. We could take out the lows and so forth. The bigger picture, again, if we look at this and we go back to the rally of 2020, I think we were measuring from this area right here up into the pivot high. You can see now we're down below the 23.6. Okay, but we're still holding the 38.2. So this is considered in my Fibonacci, that's still very bullish. I know that's hard to see, especially when if you're having a hard week or something like that. It's actually been pretty difficult 3 weeks, I think. Even though when you look back in hindsight, that hey, it's an inside and down. You know, easy, right? It's so easy to trade. That's crazy. Um, but the zone is holding, so it's a if this then that situation. If we start to break down below this 39.14, let that be your guide to just stay short and go over into the 5 minute charts, trade the PMZs and so forth. But I don't. What I practice here is being able to teach you how to do this on your own, how to identify these zones. That's what the journal's for. So please start participating so we can see that you're learning how to identify this stuff and how to think technically around the market. All right. So that's ES futures. I'm going to post some more stuff out here going into this week before we start on Tuesday. Again, I think the futures are open today. We'll see. It'd be interesting regardless. We'll see what happens. All right. NASDAQ, I'm not going to show you that because it all pretty much like looks the same. I will show you, sorry. It all pretty much looks the same. We stalled right here at the inside and up. It actually hit, it looks like it hit our second target to the tick. Wow. And then pushed up there. If you didn't notice on Friday, we came right into the daily edges and it was absolutely amazing. I mean, in hindsight, once we broke this edge, we came down to the bottom edge. Pretty neat. It worked really well. Not only did it do that on the Nasdaq, I think it happened on the ES futures as well. Yep, you can see here. So everything lined up, yellow bars. We went bid, so you could have just been sitting there all day waiting for this to go long. And it ended up working. And this is what I mean by probabilities. Let's say that you didn't take the PMZ to the low. Let's say you didn't try to get this little bounce at the edge. Let's say you didn't try to get this little bounce at the mid, or you did. These worked out pretty well. The question is, well, what do I do? What side do I take? Remember, if we break down below here, if you're okay with the risk, you put the stop above the PMZ. If we're coming down to a level from the upside, we look for it to be support. Take the trade with whatever risk tolerance you're happy with. Try it for a relief bounce. Notice that we stay underneath the cloud. All right, this is resistance until proven otherwise. We never could break over that cloud. It was bearish the whole entire day. And if there's one thing I hope that you've learned since I've been showing this almost on a daily basis, is that when prices come down into the levels, you can look down here, wait for that yellow to fire, feel confident, put your risk in, put your stop, and then look to take the trade to the upside. Where do I take it? Look for the inside and downs and so forth. Okay, so risk to reward, it's all here in the chart. Just know that, what are you okay with your risk tolerance? Okay. All right, so ES futures, VIX. We'll talk about the VIX really quick. I don't typically talk about the VIX because I think it's pretty straightforward. And honestly, you can look at it, and I have all this stuff already, put on there. A lot of traders will basically stay away from the market or from the call side if the VIX is pushing up over 20. You can see we did that. You can also see that the trendy edges have worked in the past very, very well. So when the rest of the market's getting super scared, typically your fear will go to extreme fear. Your skew is still dropping. We're pushing deeper into demand, and the VIX is pushing up here, and people are scared. But that trendy edge has been resistance this entire year, like it's supposed to be. What I'm telling you is, if we start closing above that yellow line or that trendy edge, okay, that's a different story. Things are starting to get like kind of scary. But I had this blueprint. This whole entire year. And I said the US stock market needs VIX to stay under this level, and that's for sure. So if we get above 41.56, that opens up a whole different can of worms. We won't talk about that until that happens, okay? So again, that's the VIX. My overall sentiment going into this week, once again, if we look at everything, it just feels like after Friday that the market pulled into levels that were pretty extreme. Um, when I'm looking at this and I zoom in on the SPY, see how we have this inside and up, and it's really close to the 76.4. There's a lot of confluence right here that we could see a bounce. So if we gap down in futures, again, we'll see if futures open up today or tonight or whatever. If we gap down and we're around these levels into Tuesday, it could be a buy the dip scenario. That's what I'm thinking. I notice that when we close on a fearful drop, we usually will open up and cause more fear, but it comes right into a demand zone. That's typically what I see, except for 2020 when we had that crash. But other than that, we're usually just gapping down right into some kind of support. Okay. If we gap up, and we're not over that 394.30 level, just know that that could be major resistance here on a gap up. Okay. All right, folks. Well, again, overall sentiment choppy sideways to down unless we break over the major levels that I gave you guys here. I would expect again sideways to down, short week. I'm going on vacation. Also, I am at Simpler for another 30 days. I think that started last week. So I'll be there for another 30 days. If you're still interested and do not have access to Simpler and you want to get like, Chandler's in there trading, sometimes John Carter, some of the big guys that have been in there for quite some time. You get to see some of their stuff. All you have to do is send me your email. We'll get you squared away. Um, if not, then that's okay too. And we will see you on Tuesday morning. And I'll update you guys if any, the futures do open. I'll give you some more charts and so forth. Please, 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 as a reminder, I'm not a big company. I'm very small, right? And I need your support, meaning out on social media. I am word of mouth. So if you could just kind of, put your little stories underneath our tweets and, like the content, especially when we push out the newsletter, please read that, give us a like, retweet it so that other people can see. That's how we're trying to grow. I really, really appreciate you. And again, I'm here if you need anything. Have a great day.